So welcome back. In this session, we will discuss about support and resistance. So generally, the support and resistance are of six different categories. That is the first support and the second resistance and third support to strong support and same way resistance to strong resistance and at last pullback support and pullback resistance. So first I will show you what is generally mean by a support on any stock. Let's assume the stock price is moving up and reversing back up down activity continuously happening, but look at this, at a same price level somehow the price is stopping and reversing back. That means from higher levels sellers are coming in and reversing the stock back to a downside move. This is called as resistance. Sellers coming in from higher level, so this level, let's assume the level is 1000, so this level of 1000 will act as a strong resistance and sellers are coming in from the higher level exactly near this 1000 level. Same way on downside, if price is moving up and down, the stock price, and look at this, at the same precise level the stock is reversing back towards upside. That means from lower levels buyers are coming in and stopping the sellers who are pushing the price towards downside. This is called as support. Support and resistance are generally categorized into two. That is, support we can take it one single level. Okay, support we can take it as one single level and resistance same way one single level, or we will get to have a range. Okay, we will get to have a range. That is where we categorize it into a demand zone or supply zone. Demand zone generally means the buyer's zone and the supply zone generally means the seller's zone. Whenever price revisiting this zone, buyers will reject. Whenever the price revisiting this entire zone, buyers will reject. Same way, whenever is price reaching this supply zone, sellers will reject. That's a good chance the sellers can reject. Okay, in this rejection, if we are getting at a precise same price level, if many times the price is getting rejected, then it is called as resistance, and on the downside we call it as a support zone. Now let's look at the simple candlestick chart. What is a support zone and a resistance zone? Look at this. Before going on to support and resistance, this is a kind of a demand zone. Why? Why I'm telling demand zone? First of all, look at this. Price exactly getting reversed for the 4 times from this same zone. What is this zone? Is, look at the candle which is getting formed here, a clean big green color candle. First of all, try to understand, don't get distracted by the candle color. Okay, don't fix in your mind that if green candle means buyer and red candle means sellers are there in the market. It is just a color. Always stop getting distracted by the candle color and look at this candle suggesting me, when we are gone, just revise yourself, go back and check candle pattern. This is a super bullish candle or super buyer strength is being shown in this candle. So now once the buyers have dominated in this candle, Next, what is happening is from higher levels, sellers are trying to come in and push the price lower. But what is happening is this sideways zone. In this zone also sellers coming in from higher level, but remember buyers are coming in from the lower level. Now you can have a question in your mind, how can you tell that buyers are coming in from lower level? Very simple basic logic. If price is trading in a very tight range, this tells me that sellers are coming in from higher level to push the price lower, and buyers are coming in from lower level to push the price back higher. So there is a simple fight between buyers and sellers. Both are not so strong to push the price either downside or to push the price either upside. Same pattern, same rule. Look at this. Balanced activity, higher level sellers and lower level buyers are coming in, but remember many attempts has been made from sellers. One, two, three major attempts made from sellers to push the price and move the stock price below this balanced zone, but they are not even managed to move the price below this tight range itself. Now, how I have come to a conclusion, this is the tight range. Very simple. For the first attempt, second, third, fourth, in this all four attempt, the eye of this attempt was in this zone, and the average low was this zone. That is why I have marked this range. This range can even be slight bigger also. If you want to mark it precisely, it can be slight bigger also. That is from this point till this zone, this entire range, if you want a precise demand zone. So now for total four attempts, in which the 1, 2 and 3, this 3 were the major attempts which was made by sellers to push the price lower. Now look at this, what I have told is, if it is in a tight range, higher level sellers and lower level buyers, already this full zone was in a very tight range only. So higher level sellers, lower level buyers, but one advantage is there, one important is that I can say even before this price breaking towards upside and moving up, that buyers were stronger. How and why? Look at this candle. This tells me that somehow buyers were stronger for the candle, if and more the activity was happening in this zone only, that is near the eyes of this candle, this super bullish candle, more activity was happening. If the sellers who came in from higher level, if they were so strong, they should have pushed the price lower. Now they should have even retraced, came down minimum 50% below this candle. No, price was completely auctioning near the highest zone of this candle. They not even 50% price came below this candle. This tells us the buyers who are pushing the price, stopping the sellers, are more stronger than these sellers. Okay, even before this price breaking up and going towards upside. And when price made a breakout, towards upside, this confirmed me. Already we know after super bullish candle, no price, even sellers not even managed to push the price lower 50% of it, of this candle, and price precisely getting reversed back from the zone of this balanced itself. That tells us the buyers are still so strong. This is a good pattern which I am sharing here. This is a chart pattern when a bullish candle is present or and prices activity is above trading above the 50% of this candle, this tells me that the buyers are more stronger, more actively present than the sellers. More confirmation will come when this balanced activity make a breakout and it start moving on towards upside. Same rule, same chart pattern I am implementing on towards downside also. If this is a red candle and more activity is in this lower level of the candle, only thing is if price makes a breakout, this is clear cut confirmation that sellers are more stronger. Already we know from today, you will also know if this kind of pattern emerge, this tells us the sellers are still stronger and more downside is possible. Once the breakout happens and price started moving above the breakout, then it is very clear that sellers are dominant in this case, and in this chart example buyers. Okay, so look at this. Once price made a breakout, this is the tight range, and once price made a breakout, it has given a small down move and then the real move. So this small down move and this small balanced auction, look at this, again balanced auction. After first breakout we got one more balanced auction and the next breakout. This is the strongest. This is the point we need to plan for a buy side trade. And look at the aggressive move which is coming in from 29,500 to 29,750. This is a 5-minute candle. So in just 20 minutes, 250 points bank nifty upside move is done. What I already told is balanced market. In the market type I have mentioned trending and sideways or balanced market. Balanced market, what I told is balanced markets are market type which will make our stop losses to get trigger, which will make us to lose money in the market. Okay, so avoid maximum trading in a balanced market. Wait for a clear direction. In this case we clearly know 1, 2 and 3 points where buyers are stronger. That means upside move. The direction was very clear, upside. Now when to trade? Wait for a breakout and then plan for a trade. Okay, because this balanced move is very dangerous. This is where many traders lose money in the market. All their stop losses get triggered. So now one important term which I am using for the very first time in this entire session, that is stop loss. I called it in a short form called SL. Any trade, in this case if you are planning for a buy trade here, buy trade in this location, before taking a trade you should know where to place the stop loss. So what is mean by stop loss generally? Stopping the loss. That's it. Stopping the loss. Let's take an example. You have taken a buy trade of a next stock at a price level of 1000 for easy understanding, and your expected target is 1030. Now, if once you enter a buy trade, if price comes down, not moving up straight away, it is coming down. So when price goes below 1000, you are in a loss. Your loss gets started. Now you need to have a precise level. As you now you know the target level, you should also know the stop loss. That is, let's take an example. 980 is your stop loss. That means you are risking 20 points in this trade and your target is 30 points. So that means once price comes 980, once you enter a trade, you need to place a stop loss at 980 and wait for the target. Once target gets triggered, book your profits, and once 980, as you already placed your stop loss, once 980 comes, you will cut your losses, stop your losses. That is very important in trading. Whenever in future from today, if you are taking a trade, just first place a stop loss. If you are not placing a stop loss, don't take the trade. Same rule on the downside. If you are shorting any stocks, you need to place a stop loss above it and target will be below. If you are not placing a stop loss, don't trade. First of all, try to understand, many traders have an habit of having a stop loss in mind. That is, yeah, you would have taken a he or she would have taken a buy trade at 1000, a buy side trade, expecting a thousand target of 1050, and now a stop loss would be around 980. Now what he or she will do is not placing the stop loss, just having a stop loss in mind. That is, once price comes 980, I will book my losses. Don't do it. This is the worst trading practice. If you have your stop loss fixed, just place your stop loss once you enter a trade. Immediately once you enter the trade, first place a stop loss and wait for the target. And also try to understand, after complete analysis only you are taking a trade. Once you have taken a trade, like the analysis which I have done right now, a simple analysis I have shown right now, how buyers were stronger and when, what is the direction. After complete analysis, you are planning a buy trade. Don't move the stop loss. That is, once 990, let's take prices at 985. 980 is your stop loss. Let, if your stop loss getting triggered, let it get triggered. Don't change the stop loss now to 970 or 960. That is again a worst trading practice. So in this case, once we come to know this breakout has taken place and we are getting again a balanced auction. Okay, there are two possibilities where you can take trade. That is, waiting. Once we come to know the breakout, we are confirmed that buyers are stronger, the up move is ready to come. Now once this breakout taken place, look at the upcoming candles auction, whether it is straightforward moving up, or in this case, once the breakout has happened, again it went into a sideways mode. If this is the case, if price breaks this, plan for a buy side trade with a stop loss below this, and expect the target. I will share how to identify the target levels on the upcoming classes where I will discuss about risk management. Now focus on the stop loss placement. I am explaining only for this trade because we know that buyers are stronger and we know the direction, and the breakout has confirmed, and once breakout has happened, price again into a sideways zone. Okay, similarly in this video I've also shown the pattern which we need to look: a bullish candle, a balanced auction. The breakout of this auction is more stronger and it will give a more quick upside move. Look at this: bullish candle, balanced auction. The breakout is of the candle, what I told is the buy entry. This is one of my personally favorite trade setup. Okay, I will share in depth of the trade setup in the upcoming videos, but focus on this now. Okay, how to place stop loss, exactly where to place stock. I'm roughly placing a stop loss for an explanation as of now. In the upcoming video, I will explain the in depth about this strategy. Okay.